the dip, kind of like what you just mentioned, whether it's Bitcoin, which had that dip in May and dipped down to, whatever it was, 38 or so. And we've seen that bounce since. And it's actually been a slower bounce, right? So that probably has led more credibility than anything.
Agreed.
And then what we just saw in oil, I mean, a week ago, well, not even a week ago. I mean, a couple of days ago, oil was below 62 and now it's back up to 67. So this idea of buying dips, how do we buy the dip?
Absolutely. And John, let's go ahead. So what is buying the dip? I mean, we throw that around as, oh God, I can't even say it. You're the rocket scientist, literally a rocket scientist. Colloquialism? I got close.
Yeah, that's good. Spell it, tough guy. Spell it.
Alex, or who is it, Vanna? Can I get a cue, please?
No, you're right. I mean, it has become this sort of folklore in a way. I mean, this idea of buy the dip, BTD or BTFD for those that are inclined to say so. But I mean,
it's going old school on us.
The idea of buying the dip is just you see something, move down a decent amount. We're not even going to throw numbers because the numbers are arbitrary. It could be anything. I mean, something that moves 1% a day all of a sudden drops 5%. You're like, oh, this is a good time to buy. I've been wanting to get in. I'm interested. And now this is presenting an opportunity. I'm going to buy this dip in the stock here. Right. So, I think that's usually the way we all look at it. It's an opportunity to get into something, let's just say, the market that we have right now has been going up for quite some time. And as soon as the pullback happens, you felt like you missed out, but now you have an opportunity to get in. You want to buy the dip.
Interesting. It's a good synopsis. Were you ever a momentum trader?
I mean, yeah, that's largely, one of the groups that I traded in when I was at Peak Six. That was the group we traded momentum stocks for sure. Anything that was moving, we were looking to trade those, So whether it was like right now, that would be Bitcoin, last year, that would be mostly tech stocks and or, what's the word I'm looking for? Tesla and NEO and like those, whatever those are called. I don't know, cars, whatever, electric vehicles. There we go. So anything that's moving big as a group, we would always, look for those and play those for sure.
Right. And just for some people who might not know it. So, and I'm curious to see what we're thinking about this the same way. A momentum trader is someone who takes an opinion on direction. And when let's say the market trades higher and they've got a long position. Every new high, they're buying more. They're continuing to accumulate a longer and longer position with the idea that the momentum is going to continue to pull the market up. Yeah. For many, many years, there were two kinds of guys, contrarians who would fade extremes and momentum traders who would buy this momentum. What's right? What's wrong? It depends what works. And I think it's situational.
Well, in our case, too, a lot of times, yeah, we would buy. We would love something to be on a high, and we would probably look to buy like 30, 35 delta calls. But then we would also get short a fair amount of stock, probably leaning long delta, expecting it to continue to go. Right. And if it doesn't, we want it to fall hard. One of the two.
Right. So, and there's a mix of momentum and contrarian, taking advantage of all the tools the market has to offer you. Some of the benefits of trading at a very sophisticated shop. But so in this particular instance, we're talking about we're buying at the dip in a market that is up double digits. So, is this a contra-trending short-term momentum trade? And that's almost too confusing a term. But in other words, when a market has a reversal in direction, is that statistically an interesting time to participate? So but you've had the opportunity to sell anything you want, sticks, NASDAQ, SPOs, pick them. And unless you're managing very well, it's a challenging environment with, I think, S&Ps and NASDAQ both trading at contract highs at one point last night or on the close. So here we're talking about purchasing stocks when they fall. And John, if we can go one ahead, this term always, in my mind, I always go first to stocks when I think about the term buying the dip. And whether or not if it's because of positive drift existing in stocks, a natural bias to be long relative to being short in stocks versus commodities. Now, dip buying is found in the idea that markets tend to bounce from big falls. absolute opposite in my mind of a momentum trader who sees a big fall and will look to sell more. The further and faster it falls, the more they want to sell. Now, 20 years ago, I saw guys do this. This was not the way I traded, but would be very successful doing this. Markets were thinner, less efficient, and they had more elasticity. I think it's very hard to be a momentum trader here. So we're looking to trade both sides of the markets here. And running through these four numbers, the likelihood of a positive close after a $1 dip in these three smallest products, would you thought the percentages were this dramatic, and where do you see the divergence in terms of probabilities here?
Oh, hell no. I wouldn't. I mean, all these are greater than 50%, like we also have to quantify the idea that this is data taken from January of 2020 to really basically now, right? And
good point. Good point.
And the products that we're looking at, well, with the exception of small crude oil, of course, this time period. But again, if we're looking at, it's astounding that these all have a greater than 50% chance of a positive close a day after a $1 dip. So, it just kind of, it speaks to the time period we're talking about. I mean, it's also interesting. Again, like I said, we're looking at a time period where we've had this incredible bull market, but even still, we're looking at very different products here. I mean, we're looking at small stocks, we're looking at rates, we're looking at metals, we're looking at crude. And it's just really astounding that there's a greater than 50% chance that they're going to bounce back up the following day after a dip. So this essentially shows you why the dip has worked in a lot of ways over this time period.
It does. We want to move that 50-50 coin flip of directional trading in our favor. And I think we've talked about this, and I'm not even going to mention it, that small movements of that could be dramatic in terms of P&L. But the outlier to me a little bit is the crude oil. But I think it speaks to it's not unbounded, but the unbounded relative to other products nature of the crude oil market. In other words, if you're making markets or any number of users of crude oil, there's not a lot of similar products to go and hide. In other words, there's a Brent crude oil, but there's not a lot of different flavors. There's not SPY, SPOOS, SPX, the baskets themselves, all these different places to hedge stocks. I mean, crude oil tends to have this greater propensity to move because it's what I call primary market. In other words, this huge cash market of physical crude that trades between refiners and drillers and everyone else in this upstream process of bringing crude into our lives, which is refining it into something we use. All prices to all those trades in that market off of where crude futures trade. So it's a primary market. It is really the place everybody goes to hedge and discover prices. So this 50-50 idea that it's not always easy to buy a dip here, I think intuitively over the last 2 months of our ping pong between 60 and 70, you definitely get a sense that a $1 pullback could be very painful and crude. And I think that's why we see the 50-50. But for me, the one that pops out is the metals. I think sometimes gold and silver have that a little bit of, not to the same extent, but a little bit of that unbounded nature to them. But a dollar pullback in spree, which roughly approximates, where are we? That's less than, what is that? That's less than a little over 1% pullback. About 1.3% pullback is an interesting place where 60% of the time you can have a positive up day. So I'm surprised by that because I look at 60% as being significant in terms of scalping opportunities.
Most definitely. I mean, that's exactly what you think about. It's a great opportunity to sort of play that edge, right? And try to, see how if there's going to be that bounce back now. And I think it's particularly helpful with the idea of trading small and trading often when you have that ability to, trade small. Let's see if this is going to work. I'm going to buy one here and see how this plays out. And, if you do get that move, great. If not, if it goes against just that 40% time where it doesn't bounce back, well, you still have, buying power and you have plenty of opportunity. Yeah,
absolutely. I couldn't agree with you more. And I think the positive drift on the bounce in stocks, I wouldn't have thought it would have been 64%, but it's a very interesting slide. I think the caveat that you make, which is really important, is it's this year. We're not going back 5 years. And that doesn't mean this isn't valuable information because we trade in the here and now. I don't think you and I are buying crude to look at the price of crude in 2022. I think we're looking at it for the next 22 minutes often. So,
no, this is a great slide. I mean, and having all four of these, like to show you that they all four over the, even again, over the time period, but even all four, these are very different things. They move in very different ways. And you talked about the nature of metals and crude oil being unbounded. I mean, this shows you this is kind of nuts. Like people are looking, there's a lot of money that goes towards buying the dip, it would seem. And I guess at the end of the day, this is something that I like to talk about. And I was talking about with my friend last night on the phone, this idea of, well, what makes you really fearful of a sell-off in these situations? What's really affecting? The biggest thing that would probably affect small stocks was any potential of going back to lockdown. Let's be honest. That's what hit small stocks the most over the past year. Rates, you certainly know more than me, what would lead to fear and people selling out of that, making that dip look bigger. Metals, who knows? I mean, it's unbounded, like you said. Same thing with oil. How much more supply are we going to have coming to the market? That's another thing there. And nobody really knows that. That's an OPEC deal. So there's so many moving parts here. The fact that these are all greater than 50% on a potential bounce back is incredible.
It is. And you know what, John? Let's jump to the next slide because this is interesting. And walk us through it, Jermal, because there's a lot to take away here.
Yeah. What we got here? This is last Tuesday. So this is, when markets dip, they tend to dip all at once. Sometimes, definitely last Tuesday was one of those situations. Right. I don't even remember. I guess it was probably talk of taper fears, right? I'm not even sure what it was last Tuesday. What did we have last? Was that the first? Was this the first day of the Fed meeting? Wasn't there a Fed meeting last week? I don't remember. Last Tuesday was a lot.
Or was it? Yeah, it was either that or inflation. Isn't it funny though? I think the best thing for you and I, and this a takeaway, is that you and I don't know what chucklehead event took place. Right. It was just the movement. And I think, when you dispense with the garbage, then you can really free yourself to continue to make good decisions.
And again, we already just talked about how, these are not necessarily all mutually exclusive yet. All at once, they all dipped last Tuesday. We see the bottom was kind of set in there around, close to lunchtime and started to bounce back up that single day. And of course, they've all kind of gone their separate ways, but largely I feel like I'm not sure about rates. I know for sure, obviously oil is higher and SPRI is higher and small stocks are higher over the last couple of days. It's interesting. So when you have this type of situation, actually, this is for me, these are the type of situations where I'm really interested. If everything's all moving at once, correlation. And for this particular day, it looks like correlation was one. Everything was moving in the same direction at the same time.
Good point.
And so these are the situations. Now, doesn't mean I jump right in with both feet. Not necessarily. You start, hey, something's up here. What's up? And so it makes you take notes.
So, Jermal, and can you explain that a little bit? When you say the correlation moves to one, and when we see that, what that means for you as a trader, because I think people have heard that before, but it's an important takeaway.
Well, a lot of the time we'll see it in big sell-offs, correlation going to one, meaning everything, most whether it's equities or futures, moving all down at the same time. Right. Everybody's pretty much scared, and it's almost like a liquidation type of event. And it's interesting to pull this up because that's what this looks like, right? On a day scale. Again, it wasn't, liquidation event, but everything was moving down for whatever, I'm going to steal your word, chucklehead event was going on that day. Everything was moving in the down direction. So, the idea of correlation being one where everything's moving all the way down, everything's moving down or everything's moving up at the same time. We see those at various times.
Yeah, and I think this is a great example. And now sometimes I think that's an important kind of liquidative concept. I think for me, the takeaway is statistically, well, you may not be stepping in and buying all these. And I think you made a great point with that, that there is opportunity to be had in a lot of different things when they're giving you some outlier moves. And we keep talking about this in different ways and shapes, but it's an important idea of being able to I don't know. For me, I think when correlations go to one, I think you're an experienced trader. You look at that, and yeah, we all get spun up a little bit. It's like the market's getting a bite taken out of it. But I think we still can step back and look at opportunity. And I think sometimes when you're new to products, especially leveraged products like futures, you look at that and it's like, man, the world is collapsing. It's all over, and I'm kind of paralyzed because I don't know what to do. And you can see here that across several different asset classes, you're getting that opportunity to participate. It's a really good point, Jermal. So let's jump to the last slide, John, and we'll let Jermal take us home here.
Diversified stock markets can offer the best dip to buy. And so, small stocks is a good example of this. When you see this type of dip from something that has, a bunch of things included in it, it's a lot more, you feel a lot more safer buying that dip versus a single stock for whatever single stock reason that it's dipping on. So I am usually a lot more interested in the idea of buying a diversified stock market. In this case, talking about small stocks, there was a big dip over the last week, and we've seen the rise back. And so it sometimes you'll see in a single stock probably a stronger bounce back. Again, single stocks usually move double the amount of a diversified stock market, but still, like there's a lot more safety potentially in buying a diversified stock market on a dip.
I couldn't agree with you more. I think that part of what an equity index does, a composition of stocks, is smooth outlier moves, which is kind of what we want to do to take advantage of the statistical advantage. So, great walkthrough, Jermal. Thank you so much. I know you'll circle back with Frankie and on Thursday. So guys, tune in for the next edition of The Leap. And I'm sure the guys will put theory to practice, which will be kind of fun to see. So stay tuned. And I'll be back with Frank in just a minute for the latest edition of Splash in Futures. Take care.